Another continuation pattern that's going to follow the trend either upward or downward are what are called flags, right? And it's a continuation pattern, but it has a dramatic but brief reversal, and it's a real dramatic reversal. So if your prices are, let's say, downtrending and they're going down, on a flag it's going to reverse and go, the prices are going to go dramatically up for a little bit, and then they're going to come back down and follow that reversal. As we'll see in the example coming up. And the whole idea, like a lot of chart patterns, they look like something, and that's how they get their name. So it looks like a flag, or like a pennant on a flagpole, right? And it's similar to a triangle as far as it's got a shape and all that, but it really kind of looks like a flag, a pennant, or a flag with a flagpole. And then you're seeing is a sharp rise or fall. Depending which way the trend's going, it's going to go the opposite way for a short period of time with a sharp rise or fall, depending, and going the opposite way of the trend, and then pick up the trend after that. And what you'll see also is that the pole part of it, that's where trading volume is. That's where you get this spike up in like your chart where you always see this a large amount of trading volume. A lot of people are trading, they're buying and selling the security very frequently. So you see a large, trading volume at the base of the flagpole. And then your pennant could either be at the top of the flagpole or at the bottom of the flagpole. But it's the idea of that volume is what's making your flagpole. So if we were to look at this chart pattern, and for fun, I threw in an area chart. You can see the top there, the peaks of these mountains are the prices, that they're, closing prices that they're at on this chart. And along the bottom is volume, represented by green would be an up day and red would be a down day as far as the trading on that particular day on this particular style of chart. So you can see the prices, then look to the bottom as far as the volume. And if you look from left to right, not much is happening, though it does look like we're in a definite downtrend. And as those bars get, on the horizontal bars, the volume, the trading activity, you can see there's a big downward dip as far as the trading activity that goes there. And then all of a sudden it reaches a bottom and then it shoots back up and then continues the downtrend. And if you can kind of see where those green bars are, you start envisioning a flagpole there, start envisioning that there's a flagpole, there's going to be a reversal of the dominant trend, and then at the top we might have something that looks somewhat like a pennant around that. If we add some lines on here, you can kind of see, where it's that pennant forming. It's kind of a triangle. It's kind of a more rectangle-ish as far as being more parallel lines. But the green lines on the bottom, which is the spike in trading volume, is one thing you need to be part of a flag pattern. Your flag needs a flagpole, so that you can see how it's all of a sudden had this big reversal, shot way up, and kind of forms this flagpole with a pretty big pennant on there. In this particular example, where there's this big spike in profits in prices that come up. But then what happens? It starts to go back to the original trend. That's why this is considered a continuation pattern. So if we put the, let's say, a trend line on top of that, you can see that once you get past this kind of flagpole idea, it's going to go back to that original trend. So the way to trade a flag is, let's say you see this dramatic volume, you see this dramatic spike up, and you might be able to trade in there early enough to make some profits and then get back out right away. At least in this one where we're looking at a downward trending one. An upward trending flagpole would be the opposite around that with an upward trend. But typically when I see flags, and really I see them as more, because I'm used to the traditional look of a flag on a flagpole, I guess that makes it easier for me to see when I'm seeing something in a downward trend and I'm really trying to trade on that upward spike, is how I treat it and how most people do it if they all of a sudden see a flag. Something's happened to cause that flag. That's why the trading volume comes up. There's probably some type of event or some news there. Maybe there's anticipation of a good earnings announcement after a series of bad ones, or if it was a stock, or something's going on in the crypto or Forex market, if you're trading those types of securities. Something's happened to cause the flag to, that big sharp rise. But then after that event happens, people are like, no, this is still not a great security. It needs to downtrend some more. And you can see where it picks back up on that trend. So flags can be, if you see them forming and you can get in soon enough, let's say, especially when you have that sharp reversal for the uptrend before it goes back down again, can be a great way to get a trade in there, make a little profit, maybe quite a bit of profit, and then get out right away because it's getting very spiky there. Just make sure you get out before the overall continuation trend keeps going back, as far as pushing those prices back down. Let's say if you're buying in more towards the bottom.